Guys, good morning, good afternoon, good evening from wherever you're watching this video. My name is Damola. I talk finance, business, and investment, and this is a continuation of our forex trading course. And we've been in this course for the past 4 weeks, and it's been absolutely phenomenal. I've give a ton of items and knowledge on how to succeed in trading, a lot of understanding strategies and basic skills and knowledge you need to know before you start trading. So if you just seeing this video for the first time, you should do well to go watch the previous videos on how to trade the forex market from the beginning so you can be up to date with whatever we're having. And in today's video, we want to move a step further because last week we did talk about fundamental analysis. I look at forex factory explanation of the numbers and all of that. And today we want to be talking about statistical tools and how to understand the nitty-gritties of the meta4 trading platform. So I'm going to be talking about how to set up the meta4 chart, statistical tools and how to use it, types of market orders and how to place trade orders. That's exactly what we are going to be discussing today. And without wasting time, I'll go straight to my MetaTrader 4 platform so we can begin. Okay, so first and foremost, when you download the MetaTrader 4 platform, this is how it looks like. Let me just put a raw chart and show you how it looks like. Okay, so sometimes this is how it does look like, so it doesn't really make any sense. So you have to now set this up yourself. So we want to talk about the MetaTrader 4 setup right away. So the first thing I'm going to do, I'm going to right click on my mouse. So once I right click on my mouse, I scroll down to properties. Let me put this up here. Okay. So I scroll down to properties. Once I click on properties, an icon pops up, and this is where I can change the board. I mean, my MetaTrader 4 chart. This is where I can exactly make those changes. So just watch me as I make those changes. By the way, you can also build yours to your taste. Majorly, we know the bullish candle is always a green candle and the bearish candle is always a red candle. But do whatever pleases you as long as you just understand what goes well for you. But that's basically how this stuff works. And also don't forget to subscribe in this channel if you're just watching for the first time. Subscribe, like, and share. I believe that's what you can just do to encourage me here. And we have a target and we have a goal because we are releasing tons of content. If you're interested in finance, business, and investment, so subscribe and also share, like, so you can aid the algorithm to promote the channel as fast as possible. Okay, so first of all, set the background. I don't really like a black background. Sometimes I use it, but not on my chart. I don't like it on my chart, so I'm going to change that to white color. So I'm going to change it to a white color background. Then the foreground, I'm going to change it to, it's a white color. So I'm going to change it to a black color. So it makes more sense now. Then the grid can be black, but I don't really like it. So I can get it off as quick as possible. So the grid is black color. Then my bear up candle. Now this is the bar up. It's just like a line in between those candles. That's exactly what they mean by bar up. So I put the green color, that's what I use. So I can use the dark green, and the bar down, I use the red color. The same thing happens to the bull up. I use the green candle. The bear down, I use the red candle. And I think we're all set from here. Okay, so I've clicked now. Before it was actually on colors. Now I've clicked on custom. So there are also other changes I can also implement on my chart from this custom. So offline chart, no, I don't need that. Then now chart on foreground, I don't need that. You don't necessarily need it. Now chart shift is very important because sometimes you can be back testing and you want to go back to the present chart. It has to take a lot of time to scroll forward. So you just click on that. It's like an icon somewhere at this side of my mouse. You just tap on it, then to take you to the present chart. So that's very important. Chart shift, bar chart, yes, that's what we use. Show, this is called show period separator. Show period separator separate the previous day from today. So some traders use it to just know the difference between yesterday's trade and today's trade. So if you like it, you can actually implement it, but I don't really like it, so I'm not going to click on it. Show grid. Grid is this little squares we have here, these little boxes we have here, this square or rectangle, these little boxes we have here, these square boxes, that's what it is. I don't really like it, so I'm going to take it off my chart. If you love it, you can actually implement it there. Show period separator, like I said, no axe line, you can use it because it's showing you this what they call axe line and the bid line. So what what's the price the broker is actually willing to sell it. So it's giving you like a line to show for you that. So you can actually put it so you be constantly aware of the price at the moment you want to trade. So that can be very important to you. And okay, I think this is all set. So now we have the chart now all set. Let me zoom out a little. Okay, where's my zoom icon? Okay, let me zoom in rather. Okay, we have something I want to change here. Okay, let's go back to our chart. This is actually on, okay, candlestick here. This is what I'm supposed to do. Candlestick instead of bar chart. Candlestick. We're using candlestick. That's actually better for us to understand as traders. So let me zoom in so we can see how it looks like. Now, this is exactly how my chart looks like now. So, but that's not all. I have to save the template. So I also will right click and I go to templates. Then I go to save template. I can save it with whatever I want to save it with. Just want it to load a second. Okay, so once it's loaded, I can save it to Daramola, which is my name, or whatever you call that strategy. You can save it with it, then it's saved there. So once you, let's say you have like 3 or 4 setups you have actually properties you have actually created. Once you want to move to anyone, you can actually, so you can see mine now. This is ADX best Bollinger Bands and Daramola. You have just strategies there, so you can just click on anyone you've actually previously created, so it will be easy for you to actually locate it instead of you going back to create another chart properties, which might not be easy for you. So that's just a way of the developer helping us to quickly access our properties once they have been created. So that's basically what we just need to know about the chart setup. So now I want to talk about the statistical tools we have in MetaTrader for the statistical tools. But before that, let me just give you a basic overview of what we have here. So let me take this off. So this is the chart as it is raw. This is the big screen. Now, this another thing I want you to understand. Once you go to your browser, you want to download MetaTrader 4, you can download it through your broker. For this broker, it's called RoboFX. So when you go to RoboFX, you register for a demo account. They give you access and a link to download the MetaTrader 4. So it comes directly MetaTrader 4 for RoboFX, but you can also download just the MetaTrader 4 from metatrader4.com. You can download it from there. MetaTrader 4, META 4, I mean figure 4.com. Then you can access it there, download it. Then you install it to your system, and once you open it, opens like the first thing we saw there, just like a green chart with a black background, which does not make sense. Then you have to do the property setting yourself. So this is more like the menu. These are, you have different sections and different items that you can find in here. So basically this is file view, insert chart, tools, windows, help, whatever, you have them there. Then this is create a new chart. This is not necessary. I'll just give you the thing that is really necessary for you to understand how to use the MetaTrader 4 platform. Then this is market watch. Once you click on market watch, it gives you different kinds of markets. We have the major market, the major currency pairs, exotic, minor. You have them here, so you can take them off. So it helps you expand your charts board. We also have Okay, this is not necessary also. This is also not necessary. This is how it looks like. This terminal shows you where your capital is for the moment, where your capital is, your equity, whatever trade you have running, you can actually view them here. So once you place a trade, for instance, let's assume you place a trade, for instance, now. Let's say I place a buy trade, for instance. This is demo account, so don't be scared. Blah 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 blah. Okay, I place a buy trade, for instance. So you can see it actually running here. So this is the buy trade and it's running here. So once I want to close the trade, I can actually go here and just trigger it while it runs. What I just did now is called an instant execution. I bought at the instant. That's what I just did now. But I'm going to explain it in a short moment from now. So just do well to stay on until I get this sorted out. Sorry for that. My laptop battery is actually low. Okay, so in continuation, let's have the next thing to discuss now. Okay, so the next thing we want to talk about is they have the time frames. Market is traded in different time frames. We have 1 hour chart, we have 5 minutes chart, we have different kinds of chart, 15 minutes, dailies, weekly, monthly, whatever you're interested in trading. That will be your choice, that will be your preference. Okay, so we have the various statistical tools we have here that you can use to make good technical analysis. We are going to be coming to that shortly. This is for zooming in, zooming out, and this is different kinds of chart patterns you want your chart to look like. Is it a bar chart, a candlestick, a line chart? This is how it looks like. This is actually a bar chart. Then we have candlestick, we have line chart. This is how it is. So it's just like a progression from what they were using before. As technology advances, this stuff also advances. That's how it goes. And basically, this is all through a period which is not really necessary because you have this timing duration already. So this is called the Fibonacci. The Fibonacci, don't use this, but it's just trying to show you a channel. That's what it's just trying to show you, but it's not really necessary. This is to draw a trend line. This is to draw a horizontal line, a vertical line. This is called crosshair. It's used to measure pips. It's used to measure difference in which market has actually moved. And will be point. This is the pointer, the cursor. We'll go into that shortly from here. So let me take this terminal out so my screen looks bigger. Right. So let's actually use one of the tools now for us to understand better. So this is one of the tools we have here. So first of all, I want to talk about the crosshair. Now I said first to use the crosshair to measure pips. So for instance, market is at this level where this is, at this level. So I want to draw the market to this level. I want to measure how many pips. So this is how it goes. So this is how it goes. So I can see now this market has moved by 155 pips. Now, when calculating this stuff, you forget about the last figure. Just forget about the last figure. Now, this is how it is. We have we have 19 slash 1551 slash 1.59669, whatever. That's actually the price at the moment. But what we're interested in is the center movement, the price in pips. That's what we're actually interested in. So we are bothered about the 155, and the one is just like a micro, which does not really count. So we don't actually include that for now. Not for now. You don't include that in your trading, in your pips calculation. 155. Always ignore the last digit. I'm going to explain to you that some other time, but not now, because I'm trying to be fast in this video so I don't waste your time and I don't spend much time here. Okay, so I also want to draw. So we have talked about the crosshair. That's what the crosshair is used for. You just click on it. You click on it with your mouse. Once you click on it, you go to the position you want to measure. You use your two fingers now. Now I left click with my left hand. That's what I do first. Then I drag down with my right hand. That's exactly how it works. So once you take your hand off, it goes. Once you take your left hand off, it goes basically. But once you take your right hand up and on, it still remains there. But once you take your left hand, it goes. That's how it works. Okay, so I also want to move to the next one, which is the vertical line. It just show you, let's say you want to just measure a period. You just want to see how a period is. So this is how it works. You can actually move it to the left or to the right by double clicking on it. Once you double click on it, there's something that does pop up here. So you can actually shift it to the left, or you can shift it to the right. Depends on what you want. Okay. So now I can use this tool. So why am I using this? For instance, now I just placed this on a candlestick called a doji. So I want to see what happened immediately after that candlestick. I want to see what happened. Now I can go to use my horizontal, which is this, and I place it a candle after the doji. I want to see what exactly has happened. So I can say, wow, from that doji, the market started selling. So now I want to take my crosshair to measure how many pips it sold. Now I can see for myself that this actually sold for about 73 pips. I'll repeat it again. This actually sold for about 73 pips. Not 73 pips. Okay, sorry, I didn't measure it from where I intended to measure it from. Okay, so this sold for about 71 pips. That's why it sold for about 71 pips, which is a very, very good money if you can look at it from what we have been saying in previous video, because we can see that this is. Now I'll also be giving other things as I'm explaining here. So for instance, now I went to insert, I went to shape, I went to rectangle. The same thing happens left and right finger. That's how it works basically. So I want to measure something. I'm just observing. I think there's an area of significance here. So I saw that there's this area of significance. Whenever price get to that place, it retested, and the sellers pulled it back. It retested and the sellers pulled it back. It retested and the sellers pulled it back. Basically, so we are always seeing significant candlestick. Like here we saw an engulfment. Here we are seeing a doji, which are part of what we talked about. So you should do yourself well to go watch the previous video so you can understand how this stuff works, so you can be up to date with the content we are actually sharing on this channel. So basically that's how to draw. If you're interested in using this tool, it's called a shape tool. Insert. When you go click on insert, you go to shape, then you go to triangle. That's how this works. Okay, so I've explained horizontal, vertical. Now I want to talk about the trend. So I want to see if this market is actually trending downwards. So I pick the trend. The same thing happens, left and right finger. So I use my left finger to click on my mouse, and I use my right finger to draw. So you can see that this market is actually selling. This market is actually selling. That's exactly what's happening. So this market is actually selling. So the market is trending downwards. That's the use of the trend line. And Fibonacci, okay, Fibonacci is helping us to show the area in which there's a potential for the market to retrace from the previous trend. So for instance, let me pick my pen. So here for instance, market is actually going this way. So the market now is retracing. So we want to know by what percentage will the market retrace before it starts pulling downwards. That's exactly what we use the Fibonacci for. So I will take my Fibonacci chart now, and let's see how that works. So this is the Fibonacci chart. So we are actually in a bearish market, so we want to, this is how it works. Let me give an explanation. The same process works. Your left hand and your right hand, that's how it works when using these tools. So I click from where the chart started to the list. For instance, let me give an explanation here. Okay, so just bear with me to just assume this market has actually not started forming. Just bear with me. For instance, this is what we just have. Okay, just bear with me. For instance, this is what we just have. So we want to analyze when is a potential position for this market to retrace. So we've drawn the Fibonacci for a selling market. You start from up to the least before the market started retracing. That's exactly. So let me pick in my pen again to explain further. This is where it started. This was the last high. This was the last reasonable high. Then this was the last reasonable low we have. So you can see that I drag from here to the, to the week, to the week of the last, bearish candle. That's exactly what I did. The week of the last bearish candle, the low for that period of the last bearish candle. That's exactly what I did. Then I now analyze the tool based on the Fibonacci chart I've actually drawn. So we can see different percentage level: 60.8, 50.0, we have 38.2, we have 23.6. These are different retracement levels. So at the moment, the market is at 50% retracement level. We have three significant levels that I actually support, which is this level, and this level. Some people also use this level, but most times it's not that significant enough compared to the 38, 50, and the 60 percentage level. So we have price now at the 50 percentage level, and we are seeing a doji candlestick, and we are seeing a bearish confirmation candle. So we are expecting that this market will actually sell. So let's now see what exactly happened. So we can see that this market actually sold, and it sold by 71 pips, which we actually measured. So this is an example, and actually I didn't plan for this chart. I just landed here and I decided to make the analysis. So it wasn't something planned, but I wanted you to just understand with me, to assume that this market has not actually formed. But basically, this is how we run our analysis. It's a selling market. There is an area of support and resistance, which is a significant region. We've seen a candlestick, we've seen a confirmation, and Fibonacci is telling us at 50% level. These are different multiple confirmations you use to make trade executions. And I believe that's basically what we just need to know, very level about Fibonacci, to make use of that tool. So we've actually said everything. Now we want to talk about the different types of order, and I will be using this chart screen to do that. So we have instant order, the first one we just did. So I will repeat that again. Let me just start with that for the first instant order. So instant order is actually when you take a trade at the instant. So let me write that here. We have instant order, we have pending order, pending order. Now under pending order, we have different types. We have buy stop, we have sell stop. Those are the two major types we have. And I'll also show you other types which are actually not relevant, but for now let's just explain these two basic. So instant, for instant, now this is how instant works. I actually want to buy this market, so I just right click my mouse, I go to trading, then I go to new order, basically. Then you can see that we have market execution. It's also called instant execution. I just buy, I just sell. That's how it works. Then I place my volume, it's called the lot size, the level of the risks you want to trade. I will be giving a subsequent video later on how to do this. So stop loss, take profit level, and all of that. So I can buy, I can sell. This is called instant execution. Now we also have pending order. So I can let me shift this where it can be very visible. Okay, so I have pending orders. So I come here to click on pending orders. Now under pending orders we have, okay, buy stop and sell stop. We have buy limit and sell limit. I will explain that. So for buy stop, you're actually saying you want the market to buy when it get to this particular price. For sell stop, you want the market to sell when it get to this particular price. Buy limit and sell limit, I'll explain that in a moment from now. So let's come back to this. So for instance, the market is at this level, for instance, and I want to sell, but I'm not yet convinced enough to sell. So I can place a sell limit for the market to sell at this price. That's what I want. So once the market start approaching this level, the brokers take me in for a sell trade. That's exactly how that works. Then for a buy stop, the same thing happens. I want to buy, but I'm not convinced enough. I want the market to get to this level first before I go into the trade. So once the price gets to this level, the brokers take me in for my buy stop. That's exactly how that works. But if the price did not get to that level, your trade will not be executed and it might expire and it closes. So a buy limit, I'll still use the same example. So for instance, price you want to buy, but the price has gone way ahead of you. You can decide to place a buy limit at this same level. So you're trying to tell the broker that once price retraces below here and it start going back up, they should take you in. I mean, once price retraces at this level is selling and it's going back up for a buy, they should take you in. The same thing happen for a sell limit. The seller has gone below your price. So it's, if you're buying, if you are selling at like a far lower price. And remember, that's not how we want to make profit as a seller. You want to sell at the highest price possible, not at the lowest price possible. And as a buyer, you want to buy at the cheapest price possible, not at the highest price possible. So price sell this, the price is this low, so you want the price to go back to be a little bit fairer to your advantage. Then once it's coming back, then they take you in for a sell. So this is basically how the buy limit and the sell limit works. Instant execution is placing a trade at the instant. So that's just what we need to know about how to use the MetaTrader 4 platform, the statistical tools that are very important for us, and how to place trade orders. And I have one more thing to talk about, which is some other forms of tools we have. So we use that to make like trade analysis also. It's going to be the moving averages, Bollinger Bands, and all of that. So I'll go to my trade and show you that. So it's called trade indicators. So we have different kinds of trade indicators. We have Bollinger Bands. Let me click on Bollinger Bands. So we can see for Bollinger Bands, and sometimes now in the Bollinger Bands, I don't really use these tools, I'll be honest with you, but you can actually do it to make research on them, or you can make trade decisions. But basically, in the bullish markets, once the market gets to the peak of to the peak of the Bollinger Band, we have like three lines. So the first one, when it gets to the peak, there's a percentage for the price to retrace. There's a percentage for the price to retrace, especially when you start seeing candlestick giving you indication that this price is about to retrace at the moment. So we can see here we had a doji and the price actually fell. It actually retraced. It actually was consolidating for a moment, then it sold. And also, once you are also in a bearish trade, for instance, and it gets to the lower points, there's also a possibility for the price to actually retrace also. So we can see that the price was actually consolidating. It didn't really retrace so much here, but later on it fell back. So you should make good research on the tool before you actually start making use of it in your trading decisions. So I'm going to delete this. And how do I delete it? I right click and I click on delete. Just go to the line, take your cursor to the line, right click, then delete indicator is out. So we also have other indicators you can use, for instance the moving averages. So I go to trend, I go to moving average. So this is a moving average. We have moving average 9 and 21, which is a strategy we use in trading. So I'll also implement that quickly. Then I implement, this is for 21. I'm going to implement for 9, indicator, trend, and moving average. 21 now. I want to make it 9. I want to change the color to a green color. So that's create the difference. Okay. Um, so now you can see that once it crosses, something significant happens. So here, the moving average 21 was higher than the moving average 5, moving average 9 rather. And you can see that the market was actually selling. Let me check other previous chart. So you can see the cross here. The green was ahead, the market started buying. So this is also a strategy combined with this stuff I've said. It will help you to make good trading decision. You can also save this template. You can save it the same way. That means you want your template to be reflecting your moving average. The same thing works. You save the template with your name or whatever strategy. You can call it the moving average 9 and 21 strategy. So that's basically what I have for you today in making effective use of the MetaTrader 4 platforms. And you should do well to watch previous videos, interact with it, ask questions where you need to be cleared, and I'll respond to you as quick as possible. My name is Mike. I talk finance, business, and investment. See you next week. Bye for now. Cheers.